everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 5th, 2021, and Bitcoin is looking like it's about to kind of break out. Let me explain. This video is very important, and I hope you watch until the end. I'm going to show you why there is strong evidence using Elliott Wave theory to suggest that Bitcoin will not hit its target. The target as sort of the target set by the pattern analysis that I've done in previous videos, right? If you look, and let's just get into this really quickly. We're on the 4-hourly time frame. Let me hide this. Let's actually do this together. So I'm going to erase all of this, and we're going to work through this together. Okay. First and foremost, if you're subscribed to the channel, you'll know that I've been saying Bitcoin is short-term bullish. That was the title of yesterday's video. Okay. And why am I saying that? You look on a larger time frame and you can see a bullish structure here. You can see our inverse head and shoulders, and we're going to draw that out really quickly. And everybody who knows anything about pattern analysis in charting knows that inverse head and shoulders are bullish patterns. Okay. And so let's just be consistent and do what I did yesterday. I used that wick, and I'm going to tell you why I'm not using that wick in my Elliott Wave analysis. All right. There's a reason. Okay. Inverse head and shoulders kind of like this. Okay. We're basically retesting this point of control, this sort of very important line of support. And if we were to break out of this, right, we would get something akin to 69, 70,000. Okay. Let's say we didn't use the wick. Okay. And the head was just to here. We would get something akin to 67,000. Okay. So that was my original analysis. I couldn't make heads or tails of all of this chop, all of these corrections. And I've said before on this channel, corrections, price action is largely caught in a correction, right? There's less time spent in impulsive action and more time spent in correction, right? Doing ABC corrections of different kinds, complex, simple, all different kinds, right? And corrections can get really complicated because you can add simple and complex correction, mash them together, and then mash them with another sort of wave of a correction that's also simple and complex merged. And so it's hard to see patterns in corrections. And so they're more difficult to trade. But if you can master corrections, you will be able to master charting. That is the most difficult, yet the most useful part of charting, because price action is mostly in correction. Okay. And so because I couldn't make heads or tails out of what was going on, all I could perceive was a head and shoulders, right? Then I just basically said, okay, this looks bullish to me. I'm looking at, basic support and resistance, and this is my target. Okay. So I long Bitcoin from about here, and I'm still in that long. Okay. Now I've looked at this for quite some time, and I've managed to make sense of the correction. And this is what I'm going to share with you using Elliott Wave theory. I'm going to show you why. I do not believe that this target will be met. I believe that it will be a failed sort of breakout. And you typically, and this is one of the issues with using pattern analysis, is that the failure rate is high. You can have a pattern and you can recognize it and you can print the target, but sometimes it's 50%, 60% of the time it'll only hit the target, right? And so it's tough to use that in trading. It's tough to use that as a barometer for where you should take profit. However, sort of a more subtle, a more refined tool like Elliott Wave theory can give you a little more clarity. So let's take this head and shoulders out of. Okay. In Elliott Wave theory, there's something called an ABC everything is an ABC correction. Every correction is an ABC correction, okay? There are flat corrections, there's zigzag corrections, there's different kinds of flat corrections. So let's just keep it simple. Here I perceive an ABC correction, okay? And I couldn't see this before, and even when I did see it, I thought this was the A wave. It is, but this is the C wave of this A wave, okay? For some reason, I wasn't seeing this, okay? And this is the thing about charting. You can know something theoretically, but for some reason, you just don't see the pattern. You're like blind to it. And then the second you see it, everything opens up, and it's actually amazing when that happens. I love that feeling. Okay, so let's draw up the smaller degree. So I see A, I see B very clearly now. It's like almost, I can't unsee it. You know when that happens, right? And I see C. And now to confirm what I see, I'm going to measure. And this is the beauty of Elliott wave theory. You can use Fibonacci to confirm your count, okay? And so A is meant to be retraced to the 0.5 or 618, or B is meant to retrace to the 0.5 or 618 of A. So let's pull the fibs on that. So going from the top to the bottom of A, we see that B does indeed retrace. You can actually take A down to here, right there. Actually, this is bottom of A, right there. See, B lands right between the 0.5 and the 618. That's a legitimate A. This is a legitimate B. Now, let's see about C. C is meant to go 100 or 123.6% of A, okay? So let's go inverse fibs of A, and it takes us almost exactly down to the 123.6 fib of A. And now do you see why I'm not including this wick, this sell-off into my A wave, okay? And let's see if I can include it into the B wave, but I'm not including it into my A wave because this is 123.6%, right, of the A. So that's my A, okay? So this is my sub count. Now B is meant to retrace, again, 0.5 to 618 of A. So let's take this as A. Now first let's count the subwave of B. Let's not get ahead of ourselves. B should be the same thing, A, B, C, okay? So let's see. This looks like an A of B, okay, right? This. Just like here you see 1, 2, 3, right? You see 1, 2, 3, and then you see a retrace for B. So let's just say, for argument's sake, this is A of B, and this is B of B, okay? Now we have our, all right, and we would get our C somewhere here. Let's not measure it yet. See, you have 1, 2, 3, right? The A. Now the B. Let's measure the B vis-a-vis the A. So we're going to take, what do we do? What do we do from here? Yeah. So from the start to the end, again, you see that B ends between 0.5 and 618. Again, do you see why I don't include this wick, this sell-off wick? And do I include this wick into the B? Let's see. No. Then it wouldn't be, B wouldn't end between 0.5 and 618. So you see why I'm disregarding, I'm disregarding the wick. The wicks, these sell-off wicks. And what are those sell-off wicks? And I discussed this briefly in previous videos. When you're nearing a top, and people who have a lot of the assets, right? Basically, we call them whales. They have a disproportionate amount of assets where they're able to move the market disproportionately. They're looking to sell off, and they need exit liquidity. They need a way to sell off. For every transaction, for every buyer, there has to be a seller. This is what you're seeing here. People who perceive that we're nearing a top and they need to get rid of their assets because they don't want to ride it all the way back down. That's what these wicks are. And they're heinous and they're treacherous and they're a bane to retail traders because they've stopped many a trader out and liquidated many a trader out. This is why trading is very, very challenging, especially when you get to the extremes. You know, you see this kind of stuff again, here, you see this kind of stuff. People call them scam wicks. They're not scams. They're just people that are trying to get rid of, trying to sell the top. This is not a scam. And if you're a trader and you're blaming your lack of performance on a quote unquote scam wick, or this exchange is trying to, no, then you've got it all wrong. Because in your mind as a trader, you should prepare for this kind of activity near the ends, near the tops and near the bottoms. You should prepare for big buys and big sells near the tops, big buys near the bottoms. Okay. This is why trading, you need another level of discipline. You need another level of responsibility. Anyway, let's not digress into trading wisdoms and stuff like that. I love trading, and I'm always thinking about it and thinking of how to get better. So anyway, so that's a veritable B. Now let's measure this C wave, because we're still in B. C, remember, is 100 or 123.6% of A, right? So if we were to measure 100% of the A wave in B, we would get 64.3, and then the maximum retracement of C would be 65.753. Okay, this is why. And remember, this target was all the way up here, right? Even the conservative target, not taking into account the wicks. Let's turn the magnet off really quickly. Take it from this neckline, superimpose to the breakout, which would be about here, right? I'm using the VPVR to tell me what the neckline is. 68 is the conservative target. C would not match this. Basically, we would not meet the target. And this is what I'm saying. I heretofore set my target, my take profit, right before the all-time high. Now, I'm of the belief that we will not even come close to the all-time high. We will get snuffed out at 65.753 at most, based off of my Elliott Wave analysis, okay? And this is why I'm taking profit early. And this, I hope, is helpful to you. If you're still in a Bitcoin trade right now, be very careful. This is not likely to break out and to reach its target. This inverse head and shoulders, this bullish pattern, is not likely to reach its target, okay? And what do we see on the 4-hourly time frame that can give us more indication that that will be the case? And then, so quickly, let's finish this up first before drawing our conclusions. Let's change the color. Okay, we're just going to do this really quickly. Let's tie it up. So A, let's say B, maximum retracement of B would be over here. And then C would be, again, 100 and 123.6%, which would take us down here to about 55 in this support bed, okay? So let's change the color here so we don't get confused. So this is what I'm seeing. This is my Elliott Wave analysis for Bitcoin right now. And we are at a top, and if you don't know what I'm talking about, please refer to my previous videos. But I've been talking about that for quite some time. But you see, now the larger scope of things, this is an A. Now let's measure B vis-a-vis A, okay? And so we get B hitting somewhere between the 786 and the 886. And what do we know about flat corrections? That in order to have a flat correction, B must be traced at minimum to the 786 of A. And usually B retraces to between the 786 and the 886. This is why I have the 886 on my fibs. This is very, very likely. So I'm actually taking profit, not at the 1236, but at the 786 of A, okay? So in my exchange, I measured this A wave, and I took the 786 fib, which is the minimum retracement we can get for a B wave, which I think is the minimum where Bitcoin can go before turning around and forming that C. And now let's measure the C, just to be very precise about it. C, again, would be 100 to 123.6% of A. So the maximum retracement of C would be the 55,583. It can come as high as the 57,977. So 58 or 56K. Okay. So I think it's going to rest on this support bed. Okay. And that's going to be most likely, in my estimation, the start of the first wave down, the first larger wave down. Let's zoom out really quickly to see what I'm talking about. We're in a larger ABC. Let's go on the daily. I hope I'm not losing anybody. But this Elliott wave stuff, this theory is super, super, super powerful. It has a steep learning curve. But once you get it, my Lord, can you really read a chart? Okay. And I'm not gloating or anything like that. This has taken so many hours, 10,000 plus hours of chart time, screen time, and just pouring over theory, pouring into books. Anybody can get this, but you really got to be precise, because you're only as good as your analysis. And it's not the fault of Elliott wave. It's like usually you misread the charts, right? Or you don't have a strong grasp of the rules, the principles, right? But once you do, wow. So here again, A, B, C. When I say this is going to be the first wave of the C wave, remember the C wave is a 5-wave impulse. So I foresee that this C wave is going to be wave 1 of the 5 waves down. Okay. So this is what I'm seeing in Bitcoin. This is why I'm saying, take profit sooner than later. If you're in a Bitcoin trade, take profit sooner than later. Please I no longer believe that we're going to hit all-time high. I no longer believe that even we will test all-time high. This is what I'm seeing in the Bitcoin charts. Hopefully that helps. Hopefully you guys can make use of this. And again, larger time frame, look at the stochastic RSI, look at the momentum. Stochastic RSI is a relative strength indicator, or SI, relative strength indicator. It shows the relative strength of price action. Look at what we did with the all-time high, okay, here. And now look at the drop off and look at where we are now. Does that look strong to you, right? Let's blow this up so everybody can see. Look at where we are now. You were meant to believe that this price action here, this paltry price action, is meant to sort of rival the strength of what we saw here. Look how high this is on the relative strength indicator. Look how low this is. This is what we call strong bearish divergence, okay? And look, you have a cross, a bearish cross on the stochastic RSI on the daily. This means we're getting ready to go down, okay? That means the pivot from Bitcoin going up to it trending down is imminent. Okay, so be very, very careful. Hope this was helpful. Hope this was useful. If you like this, if you find value in these kinds of analyses, if you find value in this video, please like, comment, subscribe, share, do all those good things, and I'll see you guys soon.